India, the new India. This session, ladies and gentlemen, will debate on opportunities and policies that would be most conducive to attract investment in these two sectors. And now, ladies and gentlemen, let me inform you that this session is going to be from 11 a.m. to 11:45 a.m. And in the interest of time, I will request participants to please view or download all speakers' profile from the help desk in reception area. And in case if anyone would like to ask a question, you're most welcome. Please click on Ask Queries button that you can see on your screen and put your question. It will go directly to the moderator. And ladies and gentlemen, a gentle reminder to be seated in an area where you are not disturbed because there is a lot more coming in the session for the day. Ladies and gentlemen, and now please allow me to invite our session moderator, Mr. Anant Narayan, Senior India Analyst, Observatory Group LLC and Head of Public Policy, SPJIMR. And ladies and gentlemen, now I go ahead and I also introduce you guys to our panelists for the day for the session Invest in India. Dr. Ajit Ranade, Group Executive, President and Chief Economist, Aditya Birla Group. Our second panelist is Ms. Bindu Dalmia, Chairperson, National Committee on Financial Inclusion and Financial Literacy, Niti Aayog, Government of India. And lastly, the panelists are Mr. Sanjeev Krishnan, Chairman, PwC India. So now I would request the moderator, Mr. Anand sir, to please take over the session.
Thank you very much. Good morning, everybody. Good morning, good afternoon, wherever you are in this world. Lovely to be here, and thank you to IMC for giving me this opportunity to moderate what promises to be a fascinating session with some real stalwarts. My panelists need no introduction, so the host has already introduced them. Their CVs are long. I urge all of you to look up their CVs separately. What I'd like to do is, without further ado, go straight away into the job of actually trying to extract as much as we can from our very expert panelists. While the topic is fairly straightforward, it's invest in India, obviously with a linkage towards smart infrastructure and green technology. I can't resist but start from the macro. We've got people here who are absolutely in tune with the macro, and then we'll come down to the actual topic of the session around smart infra and green energy. So let's dive in right away. Ajit, I'm going to start with you. It's been pretty exciting times in many ways. We are on the cusp of what looks like a renewed vigor towards reforms and privatization. So we are seeing things like labor reforms. Before that, we had tax reforms, agri reforms. We've got this whole production-linked incentives, which has been launched. The Prime Minister himself has spoken about unabashedly about privatization and bringing in private capital as well. So are we there? What is your 40,000 feet view of the macros looking like? Are we finally getting our act right in terms of improving ease of investments into India? Is this the start of something big, which will see us finally grow our productive capacity, grow our domestic output, and increase our jobs going forward? Your views, Dr. Ranade.
Thank you, Anand, and good morning to you. Good morning to my fellow panelists, and good morning to all the participants. This is a session on investment with special focus on, I guess, smart infrastructure and renewable energy. But let me just take a macro view. So, as you know, uh, India is the third largest economy in the world in PPP terms already. And it's also blessed with two things. You know, when you look at growth, it has two major inputs from a very conventional macro point of view: labor and capital. And those two things translated into macro advantages. Labor becomes demography. So labor force is expanding at around 2.5%, which is 1% faster than our population growth rate. And capital is in the form of savings. So India's savings rate is almost 30%, but there's also foreign savings. So these are the two macro determinants to growth, and that automatically translates into a sustainable growth rate of perhaps 7% or higher. But that requires, as you said, in addition, you need productivity growth and you also need economic reforms. Now, you refer to the economic reforms of the past few years, including tax reform and the insolvency code, and now we have labor reforms and several others. So I won't go into that. I think this will be a decade when we will see we have the national infrastructure pipeline, which is a commitment of 100 trillion rupees to be spent in infrastructure over the next 5 years. And this includes all kinds of hard infrastructure, but I would say there's also emphasis on soft infrastructure. Just like physical capital, you need human capital, which is investment in skilling, training, education, enhancement of human capital, which translates into a demography which is ready for the employment of a higher quality or higher productivity or higher wage earners. But not to forget, some global patterns. The imbalance between advanced or rich economies and India in terms of the aging demographics. So here is a country which has the potential of fast growing, but we also have a relatively younger population. Our median age is 27, I think. In the aging world, you have higher incomes, but a much bigger proportion of elderly, so which with their needs. And we are living in a world where there'll be uh, exchange, not just trade in goods, but trade in services, such as apart from financial services or in IT services, also healthcare. Let's not forget the potential for healthcare in India to cater to our domestic population, but healthcare to cater to internationally as well. This is not an area which is conventionally thought about as a potential growth area. But I would think, the macro parameters are such that they are supportive of high and sustainable growth. And we have been seeing now a combination of those macro parameters along with economic reforms and the commitment to building public goods like infrastructure. The two areas that we are going to focus on, I guess my panelists will come in on that, are smart infrastructure and renewable energy. So I will leave it to them. But just look at infrastructure. India is the mega trend for India, apart from its demography, is that we are urbanizing. Our urbanization rate is still below world average. So this is going to be a growth area. And these urban areas are not going to be in the conventional way that cities have grown elsewhere, because we are going to be benefiting. This is the benefit of being a laggard, I guess, where we are going to focus on smart urbanization. India has an official shortage of something like 26, 27 million homes. Much of these will be, by the way, urban areas, and much of these will have to be fitted or retrofitted with smart infrastructure, whether it is digital connectivity, whether it's renewable energy, whether it is smart, you know, connectivity as in physical connectivity. Already cities are seeing app-oriented bike sharing or electric scooters. So I believe the potential is immense. So let me stick my neck out and say that this will be a decade where we will see a very strong growth phase for India, driven by infrastructure, driven by demography, driven by savings.
That's a lovely note to start the this panel on, Ajit, and lots of follow-up questions I'm going to come back to you with depending on the time. But Sanjeev, let me come to you next. You're the man of the deals. You've been there, done that. You know what's happening in deal land. You know what's happening on the ground. I would love to hear your perspective on the macro as well, to add to what Dr. Anand just mentioned. And I want to throw in a couple of more things to you. Look, all the stuff that Ajit talked about in terms of opportunities, we've known this for years. Ever since I had a lot more hair on my head, we've talked about India's demographic dividend and stuff like that. Um, Somehow we have always tended to underperform our expectations and potential. For instance, in the respect of private equity, your area, in getting the big boys and girls into the country. Do our aspirations match up with our infra and our implementation, etc.? Is that risk still on? And are we doing enough this time around to ensure that our execution matches with our aspirations?
Thanks, Anand, and good morning, everyone, and to Ajit and Bindu. And Anand, I must say that our deals team still remembers very fondly the time that you addressed us and we went over. So thank you so much at the outset, Anand. I mean, to the points that you mentioned. I think from a private equity standpoint, you can see the activity levels that over the last 10 years. In fact, very candidly, and I'm not saying it, but that's been my life for the last 10 years. If you look at the foreign direct investments into India, it is the private equity investors who had the bulk of the investments coming in through the private equity route. Now, again, we started with the venture investments, then we went to growth investments, and then we went to late growth, and now we, of course, the pension funds and the sovereign wealth funds who are coming in, and of course, because of the IBC, there are a lot of stress asset investors who have sort of come into India. I think the narrative has been great with the equity investors. The narrative has been great. There has always been attractiveness for India. It started actually, and most of the time it starts with a fear of missing out, that don't want to miss out on the India opportunity from an equity investor's perspective. And if there is one thing that I do feel good about is that I've played some part, and as a firm we have played some part in incentivizing some of these global investors to come into India, particularly the pension funds and sovereign wealth funds, etc., and making them easier from a regulation standpoint to do business in India. I think that the two things which sort of resonate with me the most is that in some ways, how have they actually tracked what India needs the most? And in some ways, it's also a question of what alternative opportunities they have. I mean, I'm not saying that they're just doing it for the love of the country, but I think if you look at it, we started with when there was virtually no capital available for in some ways adventurism, if I may call it, the venture part, etc., to today where they have so many assets which are under stress, etc., some of them under IBC and otherwise requiring capital. Maybe some of the operating models are good, or it is just a consolidation. There is an equity investor which is available, which is there. I think when one needs to be able to set the right matrix, in terms of, for instance, simple thing that what is the right debt equity, and how much is it that I can support. There have been some investors which unfortunately haven't had the best experience in the past. I mean, if you look at the infrastructure investment, I mean, I call it the fourth business cycle that I'm witnessing right now. And between the second and the third, there were a lot of equity investors who actually funded the development of some of the infrastructure projects. Now, I mean, if you speak to them, they have a very different view about India, because they possibly did not realize that the development of infrastructure investment in India could create certain challenges for them, considering that they are only finite period investors. So again, it depends on who you speak to, but I think they've supported that right through. And considering what we are talking about today, I'm in a way quite happy with the progress, because if you look at it, there are a lot of, so we talk about ESG, and at times we talk about loosely, but the important thing is that it is becoming a big more and more of a boardroom discussion. It comes up in every conversation, every senior conversation that we have. And in some ways, I would actually credit the investors in driving home the point. I mean, there are many investors, I mean, as a lot of Canadian investors in particular that I've spoken to, who actually have a charter that they need X, Y, and Z to be there in their investee company. Otherwise, they're not coming into that company, right? And some of them actually want, we have had actually to converse with them that, okay, these are the 5 things, 6 things, 7 things that if you were to do, then as opposed to if you were to not do it, then you would be in a better position considering your own charter. So I think that acknowledgement is there, and that drive is there. Now, if I know that if I'm seeking capital from somebody who is wanting their investment to be ESG compliant, I will actually drive that. Whether it is by saying that I need to not use the fossil fuels and I need to use more of the green fuels, if I may, or if it is to say that I need to have a particular social standard in terms of how I look at diversity, for instance. If it is about what is it that I'm giving back to society, and also at something, the governance part is obviously there. So I think they've driven that also quite well, and now it is well acknowledged that certain investors will want you, or actually most investors would want you to be ESG compliant. Now this is good, because to the topic that we have today, it is actually driving a lot of corporates on that path. So that's the first part. I think the second part, where I have some amount of disappointment, if I were to look back, disappointment in a philosophical sense, if I may, because see, I mean, the private capital will always chase where it think it can make money. And if you look at the top 5 sectors of private equity, unfortunately, it does not include manufacturing. And I think that's been, yes, it includes renewables now, because there has been significant amount of investment which has gone into renewables, and now we can see a wave of consolidation which is happening in that segment. But if you look at manufacturing, that's not been there. And when you speak about some of the new models, when we talk about, for instance, we talk about EV, we talk about batteries and so on and so forth. I think the thing that challenges them at this point in time is that are these businesses scalable at this point in time? Because, for instance, does a public charging station make money? I mean, when will it start making money? Right? I mean, if it is not going to make money, is it that there needs to be some amount of subsidy and support which needs to come for, or there needs to be somebody who actually is there from making a car to making the components to in some ways creating the infrastructure for charging. Is there somebody who should take that, and then I'm willing to support it? I think it's there is no easy answers to that. But me, to the question that you asked, I do believe that, bits and bobs, if you were to just look at them doing bits and bobs, it's always going to be a bit harder. They will always look for where the scalability is there and where is it that they can eventually make money. But if we can set up the complete ecosystem which gets supported, and of course there has been some, I'm not saying that there has been no support for that, there has been, but at some point in time it requires better support for them to get a little bit more encouraged. And I'm sure that there is, considering their own charters, they are willing and able. I would just like to end with one thing. If I were to look at, you talked about the PLI and other things. Initially the PLI was restricted. I mean, largely I saw it focusing on three areas. But the fact that we are now talking about that, okay, can we do for solar modules, and can we do for batteries and PLI and everything? The encouragement is there. I think we are on the right path. I think the government is starting to think about subsidizing a lot of it. Many governments have already done it. Many governments are actually thinking of it. I think that's the journey that we possibly need to expedite if we really want to encourage further private capital to help in this journey that we're undertaking.
Superb. Thanks, Sanjeev. And again, I can think of several follow-up questions, but I will come back to you in a second. Let me go to Bindu last, but definitely not the least. And the reason I chose Bindu for last participant is uh, she's been bringing this focus about let's talk about smart technology and green tech. Bindu, your perspective. Can you describe to us the opportunity space as you see it here? I think it's pretty obvious the opportunity space is quite large. Sanjeev has mentioned that as well, and as did Ajit. More importantly, what is your take on the respective stakeholders in this process of making the maximum out of this potential? Are they all doing their respective bits? How are you feeling about the opportunity space going forward, and more importantly, the execution as we go along?
Thank you, Anand, for your very insightful questions, and I will answer them part by part. First of all, my greetings to viewers and fellow panelists, and a special thank you to the IMC for giving me a chance to ideate on the prospects of green technology in India. Friends, at the last G20 summit, Prime Minister Modi recommitted moving towards net zero emissions by 2050 when he called for a new global index based on respecting nature and the spirit of trusteeship of Mother Earth. With India being the fourth largest carbon emitter, as we know, the sheer scale and urgency to make the green transition translates into a whole new business
Actually, I
opportunity
can't
to
hear.
invest
There's
in
no
India.
sound.
It's not coming.
We can hear you, Bindu. Please go ahead. Ajit, you might want to mute
Okay,
yourself. Yeah?
I'll just repeat in case there was an interruption. With India being the fourth largest emitter, the sheer scale and urgency to make the green transition translates into a whole new business opportunity to invest in India, which will drive a massive investment boom, I feel, and create better quality jobs. Because the larger the emission intensity, the higher is the urgency to raise financial allocation and resources by the government and corporates to accelerate deep decarbonization. The green tech space, with the vast array that comes under it of products and utility, is now going to be another pillar of growth that will drive the economy, I feel, like agriculture, manufacturing, services, and digitization. Let's think of this as another vertical. India's weightage, we know today, is 7% of the world GDP. As we begin to reflate and our way to recovery and get back to a healthy pre-crisis growth average of 6 to 8%, increased economic activity will mean higher mobility levels, higher manufacturing intensity, therefore higher emissions. So the dilemma is that as energy requirements escalate annually, how do we achieve this by least burdening the ecology? What this also calls for is setting up of emission budgets and constituting a climate change commission, perhaps, that will advise the government on risk mitigation, and also to formulate a national adaptation plan to frequently review our pace of adaptation. While India maintains we are on target to achieve the goal of producing 450 gigawatts of renewable energy by 2030, what we require here is 600 billion of funding to leapfrog to that goal, or roughly about $80 billion per year of annual investments to get to net zero emissions. President Joe Biden's climate czar John Kerry is helping put together a dedicated consortium of countries who will be prepared to finance the transition to green energy. But aside from multilateral funding, we also need easier financing options, as we spoke last time, through DFIs for long gestation projects, along with instruments like green bonds to raise capital and competitive rates to finance climate friendly products, and for banks to offer lower interest rates to companies at the forefront of sustainable ESG practices. So, what kind of financial allocations and prospects are we looking at? Let me get to this. Firstly, consider the size of the Indian market and the scale of emissions, which translates into the business potential. Being the most populous country and with a high living density, and being a large manufacturing hub, and having a large consuming population, our average carbon footprint is estimated at 0.19 ton per capita among the poor and 1.32 ton among the rich. India's target is to bring down the emission intensity of the GDP by 35% in the next decade. Secondly, parameters of good corporate governance has widened to include ESG investing into business planning. With this new awareness with corporate India, 24 of the largest conglomerates in India that contribute to emitting 530 million tons of CO2 have signed a declaration on climate change. This is an important beginning, as private sector will have to play a crucial role in mobilizing resources to bring in innovation and tech expertise. It is estimated that a nature positive economy could globally deliver 10 trillion of annual business and create 395 million jobs by 2030. Also, uh, it offers higher rates of return, higher multiplier coefficients in generating jobs, while simultaneously shifting the emissions trajectory. Lastly, I would say that uh, India's climate commitments require a significant infusion of capital, which lies embedded, if you look at the domestic prospects, which is embedded in Budget 2021 itself, as also with the 15th Finance Commission report having ushered in new priority outlays towards urbanization, with a provision of 7 lakh crores over 5 years and with 5 lakh crores allocated for water, sanitation, and waste management, and 15,000 crores for clean air, 2.87 lakh crores for the Jal Jeevan mission. So, for every $1 spent to advance global energy transition, it is projected to offer returns of about $3 to $8 as renewable and clean energy infrastructure construction generates twice as many jobs per 1 million spent as against fossil fuels. Now, I've tried my best to explain the view in terms of where the prospects lie, where the funds lie, where we need to, and where have we reached, that is a relative question. Much like we look at corporate profits quarterly, we may have to start doing half-yearly reviews as to how far we have reached. Are we at a nascent stage? Are we at a midterm stage? I think these are very relative questions. Are we achieving economies of scale as yet? Um, Also, these the products have very short cycles, technical cycles of undergoing obsolescence. So a lot more has to be spent on R&D. Back to you, Anand.
Thank you so much, Bindu. I think that was fascinating, and you've really set out a very cogent case of what the opportunity set is as far as ESG as a broad theme is concerned, what is required in
I
terms of
went more by
investments. I thought,
outlays. I went more by looking at the outlays and the possibilities.
yeah, I think there's a very nice cogent picture which
Thank
you've
you.
nicely succinctly brought out
Thank
in
you,
a
sir.
very, very nice way. So what we're going to do now is try and open up this discussion. I wish we could have a discussion of the kind we see in primetime television where everybody is jumping over each other. So at this stage, do raise your hand if you want to come in with any points. I'd be very happy to take that. Also in the audience, keep your questions coming. There is a chat which the anchor mentioned in the beginning. Do throw in your questions there. We've got a fantastic panel, and let's try and squeeze as much as we can from them. In the meantime, Sanjeev, let me come to you. Bindu laid out this very nice course of the opportunity set, the investments required, and what's the prize at the end of the opportunity set, right? What is it that we can actually aspire for? I want to pick up on something that you mentioned. Look, what we want is this entire opportunity on ESG, clean energy, smart infra has to marry with our own requirements to provide jobs and output, and therefore increase and improve our economic lot. One of the points you mentioned was around manufacturing. The fact that somehow we've seemed to have missed the manufacturing bus. And even now, from what I took of your comments, we are not seen as yet being, despite all this China plus one discussion which is happening globally, we are not being seen as the maybe the destination as yet. Now, to be fair, changes have happened. The tax reforms that Ajit mentioned, the labor reforms that have happened, the PLI scheme, which has now been expanded to 12 sectors. Now, some of those sectors are also congruent with what we are seeing with our smart energy, clean infra kind of aspirations, battery cells and including on smartphones, etc. Some of the areas which were a problem for investors earlier, which continue probably now, is around policy certainty, around our court processes, around capital maybe, contract enforcement. Now, clearly some action has happened, reforms have happened. Do you see that conviction coming back now amongst the investors who obviously love India, but is that conviction coming back as well? And therefore, to all the points that Bindu made about acquiring $80 billion of investments, do you see that money flowing in now, given this new recommitment towards reforms and privatization?
So, so Anand, without a doubt, I mean, there's no doubt that we have made significant strides. We've taken significant strides. I mean, if you look at it, the labor reforms, that's a discussion. I can tell you, 2007, I was on a roadshow to Midwest in the US, and we were discussing labor reforms and GST incidentally at that point in time, and some of them actually told me in 2014 that GST so आया नहीं अभी तक. So, but eventually it came. So I think the fact of the matter is that we have made. I mean, I think this is very progressive. I think even on the land side, I know it's a state subject, but I think we are sort of making progress. I think obviously one can question whether it is quick enough, but some of those are things that you are willing to let go because that it is a democratic setup, and things are discussed much more robustly, and we make decisions which then everybody's weight is behind them rather than a more of a control and command kind of a thing. As I said, I think the big challenge there possibly only could be that can we act a little faster on some of those things, and some of those things have been in some ways known, and the benefits of it. And of course, there could be some frustration that we debated too much. But I think there's no doubting the fact that we have moved to I think the question really, Anant, is that see, I think the problem is that when you talk about capital, and particularly if you're talking about foreign capital, right? And I'll talk about domestic capital as well. I think the question is, it is a question about relativity, right? I mean, what is it that the opportunity that India presents as opposed to the opportunity that somewhere else is presenting? So let me tell you a conversation that, a very interesting conversation that I had with an investor. And the conversation was that yes, India needs money for infrastructure. The discussion was that what can India do to sort of excite more manufacturing into India? And labor cost is cheaper here, but unfortunately, infrastructure and logistics wide, we are still not a patch. I mean, there is a difference as opposed to
Sure.
China. Now, so we're saying that infrastructure and logistics is something that we should focus on. The problem is that when we talk about foreign capital, if lot of Western countries are now going to reinvest in infrastructure because their infrastructure has now become dated, or because infrastructure also has life, right? I mean, when can say 10 years, 15 years, 20 years. I mean, if the roads, ports, everything in some of these developed countries, 25 years, whatever it may be, require refurbishment, and these are significant refurbishments that will actually provide opportunity for foreign capital to go there with a certain amount of laws and regulations, etc., which we are getting to, but which may be more well articulated there. I think that is what we are up against, and I think that's something that we have to be cognizant of. That it is not an open. India is not an open and shut case. Yes, India will always be on the radar of investors, and there's no doubting about the fact that each one of us have a responsibility of making sure that. But let's not also ignore the fact that, as I said, there is going to be it is a competitive thing. I think one needs to be able to to make sure that, and any kind of to me, any kind of debt funding has to trail equity funding. I mean, it cannot be the other way around, and we have seen the challenges which happen when equity follows debt. I mean, we have seen some of that, etc. Unfortunately, so we won't get into that right now. I think as far as the domestic capital part is concerned, I think the one thing which is there is that there is significant incentivization which is happening. A lot of boards are taking it upon themselves, but a lot of it also, also all the changes that have happened over the last 1 or 2 years, 3, 4, actually 4, 5 years in India, whether it is a GST, whether it is a demonetization, of course, the pandemic also, I would say, they have created an opportunity for me to consolidate the existing businesses. So you can see a lot of domestic consolidation which has happened in India. And now, after the domestic consolidation is happening, people are saying that, okay, can I be omnipresent? I mean, through channels which are distribution channels. So because the opportunity for people who have the wherewithal have been in these segments, that has become in some ways priority, which has actually meant that some of these other areas, etc., which are very important and everybody is talking about it. I'm not saying that there is, they are like in, element number 3 or 4 or 5, but it is definitely, and if I have a better opportunity to consolidate, I know that I can monetize it immediately if I integrate it well. Let me focus on it, and yes, I will then focus on this. In the meantime, hopefully, there is going to be incentivization from government and whoever else, and laws will also come through, and then I will be able to support. So all I'm saying is that foreign capital, there is competition. Let's not kid ourselves that there isn't. And as far as domestic, there has been significant consolidation opportunities, which have, in some ways, this focus is not gone, but the consolidation opportunity at some level have overtaken it. That's my view on it.
I think that's very well put, Sanjeev. So thank you so much. Once again, audience, please keep your questions coming. We will take audience questions very shortly. Ajit, let me come to you very quickly next. Bindu spoke about treating this as a separate vertical itself, and a lot of what we're looking for going forward is things like urbanization, tying that with ESG, carbon footprint, etc. A generic question about, and Bindu mentioned some of the outlays being done for water, for sanitation, and so on and so forth. One area that we have underperformed on consistently for decades now is around this entire urbanization and around public services, right? So whether it is education, healthcare, sanitation, water, transportation, and so on and so forth, we've always struggled with the raising the capital and in the implementation execution. Particularly in light of this, smart energy, smart infra kind of a discussion. Are you seeing a shift there at all? Is there a renewed hope now that we might finally get our act together in terms of getting our public services and delivery right?
Well, as Sanjeev also mentioned, India has a three-tier democratic framework. So we have the central government, the state government, and the third tier, which is municipalities and gram panchayats. Now, urban governance. So we don't have a system where the urban governance is fully in tune with the way the kind of investment, framework or investor, uh, what should I say, investor attractiveness uh, that we need to have. So we have to work with that framework. I'm just mentioning that because that is definitely an area where urban India is trying to urbanize rapidly. Urbanization and modernization and infrastructure, urban infra needs lots of funding, but the cities don't have autonomy in terms of raising their property taxes or raising have their own city-wise FDI policy. But having said that, India, unlike say China, is not we don't have brand new planned cities except for a few. So our cities grow organically. Okay, so that is something to be kept in mind. Secondly, as you know, a lot of cities, I think more than 100 cities have expressed interest, and some of them have gone ahead with floating now bond financing. This was something which was not very common say 10 years ago. So cities realize that the investment is for longer term, and investors will be interested in doing long-term financing via bond financing, and the government is also enabling that. There's a lot of PPP mode. There's also special missions initiated by the Planning Commission or the Niti Aayog and central government, like the Urban Renewal Mission, which contributes towards smart infra in urban areas in cities. Uh, Also, the fact is that let's not think of 32 or 33% urbanization as as low. I mean, of course, we are behind world average, as I said. But the way to look at it is there's a huge upside because a lot of other reforms are falling in place. For example, rental housing. The framework to enable large scale rental housing, the framework to enable investment into through the instrument of real estate investment trust, or
Sure.
the framework of having large companies take over condominium development for rental housing. So many things
Mm.
have to fall in place. And as far as urban governance is concerned, I think we are seeing a move towards more and more of, uh, structure where you have a directly elected mayor rather than being under the thumb of the state government. So that also, but you'll see a variety of you'll see some large metros will be a different model. The other cities will be a different model, and smaller
Right.
towns, and then there's this concept of census townships. So I think there is huge growth.
Great.
I mean, huge growth potential there, without a doubt.
Thanks, Ajit. So now what we're going to do is we'll take a few questions which have come from the audience. Bindu, I'm going to come to you first, but Sanjeev and Ajit, feel free to jump in and add as well. The first question, Bindu, to you is ESG has become a part of board conversations, but how can we accelerate the true embedding of the ESG framework in the company strategy and sensitize CEOs and CFOs so that there is faster implementation on the ground? This comes from Mr. M.K. Chauhan. I presume it's a Mr. It's an M.K. Chauhan. Please go ahead, Bindu.
I think we need definitely higher government spending, increased private sector and household spending, and heightened consumer awareness through government messaging to make this part of our day-to-day lexicon. We need a demand and a supply push. ESG investing is not something that comes easy for corporates. They also need to create the funds and they need the funds. But it will have to be a demand and a supply push both ways. So, messaging by the government has to do the heavy lifting when it comes to bringing about higher awareness. Because, look, we need, as I said, the demand supply push to make the shift for electric vehicles, solar panels, LED bulbs, sensor taps, and things like that. So, till there is not an adequate demand, ESG is also money is not coming from nowhere. I mean, corporates have to create that money for ESG. The
Right.
demand, according to me, is still in the at a semi-nascent stage. I would not say it's at a very mature stage. I don't know if others would agree with.
So
Well,
what I'm going to do is I'm
nothing
going to throw
like
this open. Yeah,
nothing,
go ahead,
nothing
Ajit. Please
like
go ahead.
nothing like investor pressure. So Mr. Larry Fink, who is the
Yes,
CEO of the world's
yes, sir.
largest
Yes, sir.
mutual fund and asset management company, has now said
Gee,
publicly that his investment strategy is going to squarely include ESG parameters. So, that's just going to shake up and wake up a lot of people into recognizing this as a priority. And, India, by the way, is probably the only country in the world which has this CSR obligation as part of company law. But that's been a tradition. And CSR is also a vehicle through which ESG investments and ESG
today
commitments
ESG
are
is the
increasing.
new CSR. We can put it that way.
Yeah, so
It is
I
the
Very
think we're
new
good.
moving in that
CSR.
direction. Yeah.
So what I'm going to do is
So,
we've got about 3 minutes remaining. I'm going to ask for closing comments from you. Please keep it to 60 seconds if you can. What I would love to hear is I think the broad mood is positive. It is optimistic. Clearly, the opportunity set is large, and this time something seems to be going along with that opportunity set in terms of steps actually being taken. So hopefully we don't continue with that cycle of underperforming our potential. But some takeaways or some suggestions that you would have, what could we do to push this along and ensure the execution goes on well? Why don't I start with you, Sanjeev? Quick comments on what you would like to see happening.
so very quickly, I think on the ESG one, I just want to come in on the S element because I think the social element is very important because I'm concerned about employment Sorry. I,
Can
Sorry,
we
sorry.
hear
I think
each other?
yes, yes.
Okay. Okay. So all of us got thrown out, is it? I thought I
Oh,
was.
okay. I thought I was the only one also.
Maybe you
Same.
can, Anand, we can just wrap up the 1 minute each that you
Yeah,
gave to all of
I
us.
think we
So
should wrap up. Sanjeev, you were completing your point. And
No, I was just saying, Anand, that I think I was emphasizing on the S element, and I was saying that we need to embrace that S element and the diversity, because the diversity in thought does result in the best actions, and they get us the best results. So we need to embrace diversity. It can be in various hues, the haves and have-nots, the gender, the race, and so on and so forth, etc., etc. And the second one was I was talking about the whole employment generation piece, which I think is very critical, because the social dividend of this country needs to be harnessed in a very big way. So I would say those two things are critical. And the other one that I was mentioning was continued focus on R&D and innovation, because I think that's something which will put us at a different platform. I mean, we can keep doing more of the same, absolutely, no doubt about it. Will keep us going in the near term, but in the long term, it has to be innovation and R&D focus.
totally agree with you, Sanjeev, 100% on all the three counts. I think very well put. Bindu, you want to go next, please?
Briefly, in order to attract investments into India, we know it's a very, very competitive space. We are vying with our Asian peers for this space, as an alternate destination. We know all the crucial roadblocks that lie in the way, which still need clearance. Most important was what PM himself stated 2 days back, about 6,000 clearances, the cost of compliances that must be addressed. The archaic rules should be eased for fast tracking projects and availability of skilled labor, because just labor arbitrage is not enough to get new industry here, or new investments here. We need skilled labor now. We're past the
To-
stage of labor arbitrage being the main attractor of capital here.
Excellent point,
Also
Bindu, and
lowering
fully
cost of capital and cost of power, though cost of capital is perhaps one of the lowest currently.
got it. Agree with you, Bindu. Ajit, final word to you was.
So, Anant, India currently has the fourth highest stock of foreign exchange in the world, and that money, around almost $600 billion, has come into India despite being consistently a current account deficit country, one of the only Asian large countries. Everybody else, China, Korea, Malaysia, Japan, are export surplus. That means they earn more dollars than they spend on imports. Now, where does this dollar shortage? How is it that India acquired fourth highest dollar pile? Because investors pour money into India. That shortage is the capital flows, as you know, stock market and FDI and FII and private equity. So that track record itself tells us that investors have been profitably coming into India for the last 3, 4 decades, and that's going to continue. That's the biggest signal that investors need to know. And of course, it's a very diverse country. So actually, because of its diversity, there is something for every kind of to taste to suit the taste of every investor. You want to be in high tech, you want to be in digital, you want to be in financial, fintech, or green energy, or you want to be in old-fashioned infrastructure, urbanization, cement, steel. I think there's opportunity for this is I think going to be a decade of research and growth. So I hope we take note of that. Thank you.
Thanks, Ajit. So we started with a
Thank you
promise
all.
of decade of growth. We are ending with Ajit reiterating the same note. Fantastic. I think this was a lovely discussion. Lots of positivity. Clearly, optimism and opportunity set is large. I think, as Bindu put it, the ESG as a separate vertical by itself, green energy, smart infra, is definitely worth thinking about. And money is required, skilling is required, public services is required, and as Sanjeev said, employment is required to go along with that. We are taking the right steps, so there is actual visible action on the ground. But the journey is going to be large. It's going to be long. Execution will
Yeah.
be very, very key. So we've got to keep that momentum going. And I guess everybody has to pull out here, not just the government. It has to be the private sector. It has to be each one of us playing our role in
And
ensuring that
households.
we,
And households.
and households as well. So great, a lovely discussion, everybody. I think this was a fantastic
Thank you
discussion. I
so
enjoy
much.
a lot.
Thank you all. Indeed, a pleasure. Stay well,
Thank
stay
you, Bindu.
safe.
Thank you,
Bye
Bindu.
bye.
Thank you, Sanjeev, and
Thank
thank
you,
you, Ajit.
Anand. Thank you, Ajit. Thank you, Sanjeev.
Thank
See you
you. Thank
soon.
you. It's
Thank
a
you.
pleasure.
Thank you.
Thank you.
Thank you.
Back to the host, please.
Thank you, sir. Thank you so much. And I would like to thank our panelists for their wonderful insight. Thank you so much for your time. We are humbled by your presence. Ladies and gentlemen, as we promised, this session was quite informative, full of ideas and vision. And I hope, ladies and gentlemen, you all are enjoying the virtual reality experience. So, thank you, ladies and gentlemen, for being with us.